switched some corn and everybody was pretty bearish on soybeans for a while. But then, of course, you know what happened. We got China to buy and some other things happened, and we get running back up to that 1080. And then we also, same type of thing, you know the markets, then they skidded and they dropped way back down. Now, the area we're going to be looking at is this area right at the end. We're not trading 1650 soybeans, but we're trading on the end here. So we're going to be looking at that, noting that on when we had this high here in April, we were here at the high approximately at that point at 1070 or thereabout days ago in this vicinity right here of about 930. So keep those in mind as we go along, as we talk about some of the prices. You always have to have that big picture in mind, but we're going to zero in on the shorter term picture. We're also going to be looking at a couple of stocks. The first one is the JP Morgan Chase, JPM. This is a 2-year start. Of course, when we were looking at JPM, we were talking about a $50 stock up here. Whoops, I got the wrong arrow here. Let's take that one out and get the right thing in here to indicate where we're at. We're at about $50 in this vicinity right here. Whoops, still did not do it. Okay, let's try this again. And we're talking about, again, this point right here, $50 or that area. That becomes significant when we look back from where we're at not too long ago, and that is that area that got into the $47, $48 area. Then we also had this whole debacle when everything else fell apart and we slid all the way. In March, we were way down here. And we were talking then about the markets total, and so there's been a lot of movement in stocks. We're going to talk about we look at it. I know in stocks a lot depends on what happens with the this morning of 121.12 when the I guess President Kohler had resigned. So what happens in the euro is pretty important in the whole scheme of things as it affects the stock market. We're going to also be looking a little bit briefly at General Electric. This is a 3-year chart of GE. It was a 40 stock when you look all back here a little ways, around the $40 area, not so long ago. But I included this stock simply because I regard it as that's in a kind of a vulnerable situation. It's got a lot of debt coming up in the near future. On the other hand, it is a stock that is most likely to get a little help from the government if there's a bailout situation that's necessary. As you recall, it got way down to the $6 area in March 2009. It's come back to approximately near the $20 area, in April before that sharp sudden drop on May 6th. So I spent a lot of time on this because this is a stock that's, as I say, kind of vulnerable to some things that are going on, some cross currents that are going on in the world markets, but one that is worth taking a look at to see where you might enter or exit using some of the indicators that we're going to be talking about. The software that I'm going to be using to analyze these markets and to see a little bit more about how to get in, is Vantage Point Intermarket Analysis software. Traders need to have a little structure to the market. They need to have something that they can look at, something that they can use to bracket the price action and find out what need to find what potentially could occur based upon what the indicators are reading in the market. And we need a little bit more than generalities. We need some points to trade with. We need a way to assess the probabilities of what will happen, some degree of reliability. This tool that I have found quite useful in this type of analysis is Vantage Point. It's clear that I am not a salesman for Vantage Point. I don't get any money for selling any kind of product. Looking at this in terms of a trading tool, working with some trading strategies. VP is one of those. is based upon intermarket analysis, a by major markets that are affecting the target market that we're looking at, and the degree of that influence with a set of intermarket data that it derives from what it sees in these other markets influencing the target market. A price called the typical price, that is the average of the high, the low, and most analytical software. We're talking about generally the close, and that's just that one price per day. We have kind of run this through computers. Analysis has indicated prices are more useful for forecasts because they take into account the whole range of prices, not one price. So we're going to be dealing with intermarket analysis. We're going to be dealing with prices that are called typical prices. So it's keeping in mind that's what we're going to be looking at for the most part during this whole webinar. We're going to turn to the charts from Vantage Point, talk a little bit more about what you can get with the Vantage Point chart. And as you can see, we have here a chart of the soybean chart that I mentioned before. We're going to add a few things to this chart eventually. It's a one-year chart, but the first thing I want to point out is kind of like what situation is it that maybe would make it worth your while to analyze these markets and try to get something out of them. First thing we're going to do is we're going to take Vantage Point's opportunity calculator, and you can see that we had a move from low to high there. Almost $2. That's about $10,000 per contract. So I'm sure that you can imagine that that would be something that would be worthwhile trading. I mentioned before we're talking history when we're talking about here, but when we look over here a little bit more currently, we have a situation in the latest run-up where we went from approximately the 940 area up in the 1020 area. It was a little over 70 cents, and somewhere in the neighborhood of $3,500, $4,000. So all of these moves, these are moves that we want to try to capture if we can, if we are trading, and to try to find out a little bit more about what goes on and how we can enter the markets. Now, to get a better feel, we're going to zoom in and look in at what is going on. This is a 9-month chart. We're going to take this down a little bit further, down to the 6-month chart, and you kind of see the framework of prices shaping up. On this 3-month chart, I want to point out a point that you can see right here where the cursor is and where that horizontal line goes across, where you can see those lows are around the 930 area. That's something that you'll want to note when we get into looking at what is going